Joining us right now is Independent Advisor Alliance Chief Investment Officer Chris Zaccarelli. Chris, good to see you. Thanks so much for joining us. So can the U.S. grow? Can the U.S. continue to show good growth numbers even as Europe is slowing and China is slowing as well? What do you think?
Well, I think it's really tough. I mean, the U.S. is not going to be an island unto itself. It's true that for the most part, the U.S. has been really the economic engine of growth over the last 2 years, whereas the rest of the world has slowed down. So I believe that we can continue our expansion. There's no reason why we have to go into recession, but it is very difficult for us to continue to grow while the rest of the world slows. So I would be a little bit hesitant to say that we can just continue to go on our own way without that being an impact from other parts of the world.
Chris, good morning. Mitch Rochelle. One of the things that's noteworthy, and this is one of the things that played out on Friday, is that the German Bund fell to a negative yield. I believe there's $10 trillion around the world of sovereign debt that has a negative yield. Is that going to be an issue for us? Because more and more dollars are going to flow to the United States because we have a positive treasury. But is that something we're going to have to play catch up on at some point?
Well, negative yields around the world, it definitely just shows the extent that central banks around the world, whether that's the ECB or whether that's the, other parts of Europe, are really trying to stimulate their economies. That weakness is really the sign for why they're keeping yields low. The impact that have on us is that all things being equal, it's actually keeping our yields lower. So you're right, there's going to be some money that's going to flow into the U.S. as people are seeking out positive yields elsewhere. They have to worry about currency impacts, so it's not as straightforward as just looking at our 10-year at 244 and their 10-year being negative. But really what's interesting is what's happening with our yield curve. You look at the three-month Treasury bill being higher than our 10-year Treasury note. That happened on Friday. Typically, that'll indicate a recession is coming sometime in the next couple of years. And in fact, we've seen the last two recessions be preceded by an inverted yield curve and seeing the market top out about 18 months later. So we've got time to run here in the U.S., but I think that inverted yield curve is a negative sign, and that's what I'm more worried about than anything we've talked about so far.
The yield curve actually inverted before each of the last 7 recessions measured by the National Bureau of Economic Research. But to Mitch's point, he's saying that because yields are negative, which essentially means that you are loaning money to a government and you're actually having to pay the government to hold your money. That's how upside down it is. But what you're suggesting is because we still have over 2.4% that our 10-year is paying, that it's driving money into Treasury. So maybe this time, I'm guessing, that the inversion, because the yield on the 10-year is falling, the money's flowing here because you do get paid to lend the U.S. government money, that maybe that's the reason that it's falling, and it's not because it's some recession indicator. It's possible.
The one challenge is 18 months from now we'll be knee-deep in a general election. So
that's true.
Yes.
So it's even that much more important, given the fact that the economy is one of the key reasons that President Trump got elected. Meanwhile, there's China trade. U.S. Trade Representative Robert Lighthizer, Treasury Secretary Stephen Mnuchin traveling to Beijing on Thursday for the next round of talks. China's vice premier is expected to visit Washington on April 3rd. What are you expecting in terms of a China deal, and how important will that be for markets?
Well, we believe that a deal with China will eventually happen. I'd be surprised if it happens as quickly as next month, but obviously the talks are ongoing. There's been a lot of positive signs out of what's happened so far, and it is in everyone's best interest. President Trump definitely wants a win. The Chinese want to turn their economy around. Everyone wants this to happen. It's just a question of where the negotiations go and what compromises have to be made. But we do believe that ultimately this will get resolved positively, and that will be very good for markets.
Yeah, I mean, one of the most important things here is for the administration to come up with some kind of an enforcement to enforce that China does, in fact, follow its promises, keep up with the promises that they won't steal IP, intellectual property. Chris, real quick, how are you allocating capital right now, having said all of that?
So right now, we continue to favor the United States over international. When we are looking international, we're more looking towards emerging markets. We think a lot of the damage that's been done through the trade war has been priced in. And so therefore, if you're looking at Europe or looking at emerging markets, we have a preference for emerging markets over Europe. But in general, the United States is still the best place to be.
Chris, good to see you this morning. Thanks so much.